I'm Super Joe Pardo, and today we have a full lineup of news to break down for the EntrepreNEWS. We got an Evergrande update, not a small update. Tesla moves headquarters from California to Texas. U.S. jobless claims fall to 326,000, the first drop in 4 weeks. Ireland, the low tax European haven, if you will, for April. Apple, Facebook, and Google will raise its corporate tax. Find out how much later on here. United Airlines to fly 91% of its 2019 domestic flights in December. Levi Strauss, doesn't have a cotton problem apparently. Robotaxis, from robotaxis to doubling revenue. We're following the GM investor days that they have, and its new plans to elevate its revenue going forward. There's a story about Americans with criminal records could be the solution to the labor shortage. As well as the final story of today, I used my stimulus check to start a $3 million business. So we will get through all that. But first, I got to remind you that tonight there is a brand new season of Shark Tank that is going to be airing starting at 8 p.m. Eastern. If you aren't able to watch it or you want to come and see me react to it, I'm here for you. Go over to the YouTube channel, youtube.com/Super Joe Pardo, and I will have those reactions between like 9 and 11 p.m. Eastern Daylight Time. We're still on daylight savings time here in the States. First, let's get to the first story. Chinese markets return from break to more Evergrande angst. Barely any fresh insight available how regulators propose to contain contagion from cash-strapped China Evergrande Group's debt problems and problems or sell units. I gotta say, I think I said this in the past. If this was America, there would be like so many stories breaking about this repeatedly throughout the day. And I guess because it's China, they don't come out and say things like we would have, all kinds of politicians coming out and always having something to say about a company, kind of like when we had our 2007-2008 crash. China's markets return on Friday after a 7-day break with barely any fresh insight on how regulators propose to contain the contagion from cash-strapped China Evergrande Group's debt problems or even the firm's own plans to sell its units. Evergrande facing one of the country's largest ever defaults as it wrestles with more than $300 billion of debt. The company last month missed coupon payments on $2 bond tranches. The possible collapse of one of China's biggest borrowers has triggered worries about contagion risks to the property sector in the world's second largest economy, as its debt-laden peers are hit with rating downgrades on looming defaults. Bloomberg reported on Thursday that some dollar bondholders were invited by advisors to a call on Friday to discuss that call. I guess took place about almost 4 hours ago. To discuss strategy and how to broaden the group. A group of bondholders previously selected investment bank Moelis & Co. and law firm Kirkland & Ellis as advisors on a potential restructuring of a tranche of bonds. Two sources close to the matter said in September. Chinese regulators have not made any comments specifically on Evergrande during the week-long holiday from October 1st, although the central bank last Wednesday urged financial institutions to cooperate with relevant departments and local governments to maintain the stable and healthy development of the property market and safeguard housing consumers' interests. Investors have been waiting to hear from the company after it requested a halt in the trading of its shares in Hong Kong on Monday, pending an announcement about a major transaction. Evergrande Property Service Group, a spinoff listed last year, also requested a halt as well. While sale of assets would temporarily ease concerns about Evergrande's cash flows, analysts also reckon that the indebtedness of Evergrande and some other Chinese property firms is too large to be resolved quickly. An index of China's high yield debt, which is dominated by developer issuers, has been sliding through the week and is down more than 21% since May. It could soon see spreads at the widest ever. The property sector's troubles mounted during the Golden Week break. Two Hong Kong property agencies said that they are suing Evergrande over unpaid commissions, while bonds of other property firms such as the Kaiser Group, Central China Real Estate, and Greenland real estate, like, and Greenland, like as in Greenland, were battered by the uncertainty. Still, sentiment improved slightly on Thursday, with the U.S. traded Chinese stocks Alibaba Group Holding and Tencent Holdings each surging about 8% as concerns around U.S.-China trade relations and Evergrande's debt crisis appeared to ease. I don't know that it appeared to ease so much as is like, there hasn't been a super big development other than they keep missing their fiduciary responsibilities, right? So hopefully come Monday we'll have some more news about it, that can hopefully something will come out about that call that happened today 4 hours ago. I am pretty confident there will be more news later today, if not already. Maybe something that's going to break. Hopefully they have a plan in place and or are not just sitting around waiting for regulators to do something about it, because obviously if they're not talking, that means there's no political positioning happening. And I mean, they have a different system than we do here in the States. But again, I want to reiterate, I'm very concerned that there's, the consequences of something this big collapsing will be felt through the world. And I want to say that it's not time to panic yet, but in this case, I guess no news is good, or very little news is good news. Tesla moves headquarters from California to Texas. Tesla officially moved its headquarters to from Palo Alto, California to Austin, Texas. CEO Elon Musk announced that at its company's 2021 annual shareholder meeting. In April 2020, on a Tesla earnings call, Musk lashed out at California government officials, calling their temporary COVID-related health orders quote-unquote fascist, in an expletive-laced rant. In 2020, Musk personally relocated to the Austin area from Los Angeles, where he had lived for 2 decades. So I guess this means that the paperwork is finalized. The meeting took place on Tesla's vehicle assembly plant, or at their assembly plant under construction outside of Austin, on a property that borders the Colorado River near the city's airport. However, the company plans to increase production in its California plant regardless of the headquarters move. So that's good to know. So that they're not totally abandoning California. They already have a plant there. They already have production. They already have things figured out and moving right along. And they are just simply moving their headquarters to Austin, Texas. I mean, it's kind of funny because a lot of companies tend to incorporate and or headquarter themselves in the state just below mine in Delaware, because they have great, they're very business friendly there. So even if it's just the headquarters, just a person, that's or like a closet or something to that effect, where they have maybe one desk or something, that's where they headquarter out of while they operate in other states. So to be clear, we are continuing to expand our activities in California. Our intentions is to increase output from Fremont and Giga, Nevada by 50%. If you go to our Fremont factory, it's jammed. He also added, it's tough for people to afford houses and people have to come in from far away. There's a limit to how big you can scale in the Bay Area. Regarding the full plant underway in Austin, he noted that it would take some time to reach full production even after it's completed. It takes Tesla less time to build a factory than to reach high volume production, Musk said. For example, Tesla's Shanghai plant was built in 11 months but took a year to reach high volume production. He expects Tesla's new plant near Austin to follow Shanghai's example. Musk's growing dissatisfaction with California has been apparent for some time. In April 2020, we talked about that. He called out. So I think that, when back in our Pardo truck parts warehouse days, when we would open up a new location, it would be expected to take a year to 3 years to not only get everything running the way we want it to run, find the right people to run it, but also to get enough customer base out of there. In this case, it's a manufacturing plant, so they already have the customer base, but just getting the right people, getting the processes in place, getting everything, anything could be like work out, quote unquote, perfectly on paper, but when it comes to actually having it, in the field with people behind it, and things of that nature, that's when when the rubber meets the road, that's where the problems happen, and that's where you need to go through the process again and get things ramped up, right? Get people trained up to be able to, anybody could, any quote unquote anybody could put a car together, when they're only expected to make one. But when you start talking about like, okay, how do we get it to 10 cars? How do we get it to 20 cars, 30 cars, 50 cars, 100 cars a day? That requires everybody to know their job, be very specialized in it, and all of that. So it's kind of crazy that Elon chose to build in California to begin with, and continues to maintain that they will continue to make the cars in California when they, like every other car dealership or manufacturer, is like, well, we're gonna make some here, but like we're really making it over in Mexico, and then we'll ship them over. So like, bye to all those jobs, and not our problem. We're moving on, and things crumble around them, and they're like, not my problem. It's so I applaud that end of it. I do still take some issue with the things that Tesla has going on. It's not all roses and rainbows and sunshine, but hopefully this move to Austin will help enable them to get more production going as quickly as possible, and as well as enable Musk to be more efficient going forward and with his time, especially since he's been located in Austin for about a year now. U.S. U.S. jobless claims fall to 326,000, first drop in 4 weeks. Before COVID-19 hammered the U.S. economy in March 2020, weekly claims were consistently coming in at around 220,000. So we're getting closer to pre-pandemic jobless claims, which is good. That's awesome. Ding, ding, right? It does not mean that we're out of the water yet. The number of Americans applying for unemployment benefits fell last week, another sign that the U.S. job market and economy continued their steady recovery from last year's coronavirus recession. Unemployment claims fell by 38,000 to 326,000, the first drop in 4 weeks. Labor Department said on Thursday, since surpassing 900,000 in early January, the weekly applications, a proxy for layoffs, had fallen more or less steadily all year. Still, they remain elevated from pre-pandemic levels before COVID-19 hammered the U.S. economy in March 2020. After hitting a pandemic low of 312,000 in early September, claims had risen 3 weeks straight, suggesting that the highly contagious Delta variant was at least temporarily disrupting a recovery in jobs. Contingent macro advisors said that the recent uptick was also partly caused by backlog in processing orders in California and other states. Shutdowns at auto plants resulting from a shortage of computer chips could make the numbers volatile over the next few weeks. And Contingent said, but the trend towards lower jobless claims remain intact. Yeah, so I mean that's one of the other things is it's not just about businesses that don't have customers. It's about businesses that don't have access to the supply chain, that don't have, if you're struggling with being able to keep things on the shelf, like you don't need the people there. I think that depending on where you are in your business, it's really important that you try to keep as many people as possible so you don't end up with the rubber banding effect of like, okay, now we need a whole bunch of people. And like everybody moved on. Everybody went somewhere else. Everybody said, you know what? I'm going to take this as an opportunity to go and start my own business. I'm going to take this as an opportunity to go and work in a new industry, to take control of my future and get retrained in something that has a bigger and brighter future for myself and for my family. Dealing with these supply chain issues is tough, and there's sometimes there's not a lot of profit margin there, which we'll get to a story about GM increasing their profit margin in the next 8 years. But I firmly believe that if you have a trained set of people, you need to do everything you can do to keep them, because if you just let them go, they're trained and they could do it for somebody else, or they're smart enough, they're focused enough to go and train themselves to go do something else. And that's what you don't want, because when you need them to come back, they won't be there for you. As we've gone, just 20, 30 years ago, where it's like, hey, it's not that uncommon to say, I work for one company for the entirety of my career, or maybe two companies for the entirety of my career, to now just, 30 years later, hey, if you work 2 years, they say, if I don't know all the statistics to back all that up, but the statistics, from what I've read is like, if you work for a company for more than 2 years, you're actively losing money. You are actively losing money from by not jumping ship to escalate yourself on the job ladder, right, as a whole, not just the corporate ladder of the singular company that you're working for. So, I hope that this is a good sign of things to come, and that we continue to have those jobless claims fall, especially as we have such a huge pot of businesses that are looking for work, for workers right now at escalated wages. So but it's also hard to find a good fit, right? Just because you're out of work doesn't mean that you're going to go and work in an Amazon warehouse. I mean, you will if you absolutely need to, but if you are already in a somewhat special, if you're a dental assistant, are you going to go and work in an Amazon warehouse? I don't know. I mean, I spend money and time in becoming a dental assistant, right? Maybe I'm working towards becoming my own dentist, a dentist in general. So I kind of think that it's about finding the right mix of people at the same time. And that's why it's so important that you try to find ways to keep the people that you have around you. Shout out to Super Denny Decoy, Grand Rising. Super Joe, how are you feeling today? I am feeling Wonderful. I am excited. There is a brand new season of Shark Tank tonight. You should totally come and watch the reaction videos. They'll be up not long, within 1 to 2 hours of the show going live tonight at 8 p.m. Eastern. So my videos should be up by like between 9 and 11, each of those videos. We're doing great. Denny, I hope that you're feeling well as well. I hope you're feeling great today and having ready for a great weekend ahead. Awesome. Yeah, I will see you in. I won't be able to do the premieres tonight because of the way that I have to crank out the videos. But I will see you in the comments tonight. It would be awesome to see you there. Ireland, the low-tax European home of Apple, Facebook, and Google, will raise its corporate tax to 15%, joining a global agreement. Wow. This is probably one of the biggest, outside from the debt ceiling news from yesterday, this is potentially huge. This has huge ramifications. Ireland has agreed to set 15% corporate tax rate for large multinational companies. Ireland has been the low-tax European headquarters for tech giants, including Apple, Google, and Facebook. Ireland said on Thursday it would give up its 12.5% rate for large firms. So it's increasing. Ireland said a joint national agreement set the minimum corporate tax to 15%. The country dropped its opposition to an overhaul of global corporate tax rules, agreeing to give up its 12.5% tax for large multinationals with revenues in excess of 750 million euros or $865 million. Ireland, the low-tax European headquarters for tech giants, including Apple, Google, Facebook, declined to sign up to the initial deal in July, objecting to a proposed rate of at least 15%. An updated text this week dropped the "at least," clearing the way for ministers to do what successive governments said that they would never contemplate: giving up the low tax rate that has helped win Ireland investments and jobs for decades. Joining this agreement is an important decision for the next stage of Ireland's industrial policy, a decision that will ensure that Ireland is part of the solution. This is a difficult and complex decision, but I believe it is the right one. All but a handful of the 140 countries involved signed up to the July deal, brokered by the Organization of Economic Cooperation and Development, or the OECD. That rolls off the tongue. That marked the first rewriting of the international tax rules in a generation. The holdouts, which include fellow EU members Estonia and Hungary, can't block the proposed changes. The 140 negotiating countries are due to meet on Friday to finalize the deal. The U.S. Treasury, which had pressed Ireland to support the global minimum tax, hailed Dublin's decision as putting the world on a path towards a generational achievement to ensure corporations pay their fair share of taxes. If Ireland had maintained its lower rate, multinationals that book profits there could be forced to pay the additional tax elsewhere under the proposals. The government said it had received assurances from the European Commission that Ireland could maintain the 12.5% rate for firms with annual turnover below 750 million euros or $867 million, and keep tax incentives for research and development. The Commission also promised it would stick faithfully to the OECD agreement and not seek a higher rate among member states. So that is quite a bit there. So, having the minimum corporate tax rate be 15% does start to change the landscape for these giant companies that, like Apple, has been enjoying this since I think the late 70s, early 80s, when they went and. Are they incorporated out of? I forget if they're incorporated out of Ireland. I forget how I've watched the documentary on this, but I don't quite remember the exact details of it. But yeah, it basically has enabled them to, skirt a whole lot of taxes along the way and create this amazing amount of wealth, a pool of money for well, especially for Apple, but for Google and Facebook and others. I've recently watched the was it it was like a John DeLorean documentary where he went to Ireland specifically because of the taxes back in the 80s, right? Because he wanted to be able, they were willing to like help him pay for the building and for the manufacture of the car and all that stuff. So Ireland has done a lot of things to keep the money flowing into their country. I'm sure it was hard to succumb to said pressure of like, hey, we need to do something about this. And with they said about 140 countries, that means that there's, I don't know, was there like 180 countries in the world? So there's some countries that that might be become the next Ireland as they become holdouts on said agreement. But I think that there needs to be something to that level so that there's no advantage. We need to take away that advantage of like just stashing money, especially when companies like Google who don't really make. There's 190 countries. Thank you, Denny. I appreciate that. I thought I just thought it was like closer to 180, but yeah, probably about 100, 190 or so. So we need to make sure that they're paying their fair share and that they, especially companies like that are in tech that aren't producing a hardware product, they, can expand their wealth so rapidly because it's, it's servers and it's bandwidth and it's not necessarily they have to, build the iPhone and all that stuff. It just creates such a fast-paced funnel of wealth to them, and then to not have, to be able to just skirt it through a country in, Western Europe is just always been mind-boggling to me, and I think overlooked by a lot of people. But we'll see how this plays out as far as the pricing of things going forward. Is Apple going to end up raising their prices going forward, or are they just going to take a little less profit off the table to keep it going? We will see. United Airlines to fly. Let's see. United Airlines to fly 91% of its 2019 domestic flights in December, a pandemic high. Anticipating strong holiday travel, United Airlines said on Thursday that it will offer 3,500 daily flights within the United States in December, the most in any month since the pandemic began. United said it plans to offer 91% as many of its domestic flights as it did back in 2019, December 2019. That month, United will debut new direct routes and restart a handful of others. So I'm guessing that they were able to get their labor situation figured out here. Let's see. United and other airlines enjoyed strong demand this summer because of widespread vaccinations, though the spread of the Delta variant of the coronavirus slowed that momentum going into the fall. The industry had hoped that the corporate travel would restart in a big way after Labor Day, but many professionals have not yet returned to offices full-time, and business travel remains down. We talked about this yesterday with DC hotels projected to lose $2.3 billion in revenue because business travel is not a thing. Overall, air travel appears to have settled at about 75% of 2019 levels in September, according to data from the Transportation Security Administration. They could have just said TSA. Everybody knows what the TSA is. The Biden administration's plan to relax travel restrictions on vaccinated foreigners starting next month is expected to provide another boost, especially around the holidays. United said it expects the Wednesday before Thanksgiving and the Sunday after the holiday to be particularly busy. It also expects Thursday, December 23rd, and Sunday, January 2nd, to be popular travel days. I mean, that's great. People getting back out and traveling. assuming they're vaccinated, or the pandemic continues to be on the downturn, at least for now. Hopefully this is the last of the waves that we have to go through. I'm hopeful that will be the case. Like I said, I hope that I assume they were able to get the people to do it. I also kind of hope that this isn't just a marketing ploy to say, hey, we're back in business, we're going to be running all these flights, and like, the reality of it is we're saying this because we want people to book so that we could pay people to get butts in seats, and not have into a big problem where it's like we start canceling flights left and right, leaving people stranded in a bad situation, or in a situation where people don't trust, the company as a whole. I mean, United and US Airways both have their own streaks of terrible, no good, horrible PR press over the years. So it'll be interesting to see how they handle this going forward. So I'll be tracking to see if United is able to keep up with what they believe is going to be super high demand, and if they're actually able to deliver on that high demand. So we'll see. Stay tuned for that. Levi Strauss doesn't have a cotton problem despite price surge. Levi Strauss hiked prices by 5% earlier this year. So they, let's see, this is talking about a massive shortage of toilet paper and other goods. I don't know if that's, Fox News has their business has a thing with like putting old video footage on top of new video, or on top of new stories. Levi's doesn't have a cotton problem. Levi's says its business is insulated from surging cotton prices at least throughout the middle of next year. Cotton prices have soared more than 20% since the middle of September, as a number of factors, including drought and regulations, have created supply and demand imbalance. The higher cotton costs are expected to cause the clothing companies to hike their prices in an attempt to offset the hit to their bottom lines. Levi's, however, says the action taken earlier this year will allow the company to navigate more efficiently. We have negotiated most of our products' costs through the first half of 2022 at very low single-digit inflation. And for the second half, we are anticipating a mid-single-digit increase, which we will offset the pricing actions we've already taken. The San Francisco-based denim jeans maker hiked prices across the board 5% during the second quarter, resulting in about a 1-point increase in gross margins. The increase came as more Americans needed to restock their wardrobes after months of lockdowns, which led to bigger waistlines. Yeah, for anybody who didn't work out during or hasn't worked out during the pandemic, they might be feeling that crunch, and good on Levi's to lock in those prices, and hopefully it continues to stay locked in, because just because you negotiate one thing doesn't necessarily mean, like, look, we could run into all kinds of supply shortages, driver shortages. There's so many factors that are just pulling, the economy in different directions. So, hopefully that is the case, and they're able to maintain where they want to be with their pricing, at least into the middle of 2022. But I'll tell you, the middle of 2022 will come faster than you think, and the middle of 2022 might actually mean like February, because things just get kind of out of hand very quickly. So we will be watching to see if Levi's is able to maintain that agreement and keep single digit inflation. So maybe it goes up, 2, 3, 4% instead of like, hey, jeans are now 20% more expensive. Like, that would not be good for Levi's or its customers. From robotaxis to doubling revenue, here's how GM is laying out its plans for the future. So we talked about this a little bit yesterday. From increasing profit margins, and $280 billion is expected revenue by 2030 to 1 million robotaxis. A look at the most significant figures from General Motors Investor Day. Let's see here. General Motors is delivering the technologies that redefine how people and goods are moved. Our commitment to a vision of a world with zero crashes, zero emissions, and zero congestion has placed us ahead of much of the competition. That seems like a bold claim, considering that Super Cruise is the closest thing that they have to that, and it's like on Cadillacs only, and they have halted their ability to send those vehicles out for the time being because of the chip shortage. Investors weren't immediately impressed with GM's announcements during the more than 5-hour event. The automaker stock closed Wednesday down less than 1%, at $53.93 a share. Shares closed Thursday up by 4.7% to $56.44 a share, helped by a broader market rally. So profit margin. GM plans to increase its operational profit margin to between 12% and 14% by 2030. That's up from 7.9% in 2020. That is quite a. That's so, like, I don't know. It's 7 years, 8 years out from now. Actually, it's 9 years out from now. So I'm sure they have a plan, and that's what they're planning to do, but I don't know where you're at 7.9% right now. I wish they had shown what they were at in 2019, because that, like, basically the world's been on pause, so I don't know if that's a good. That actually might be high. Maybe in 2020 it went up because of the pricing of everything starting to go up, and they were able to fit in a little more profit margin in there. BrightDrop. Much of the investor day Wednesday was focused on the company expanding its business to generate recurring software and service-based revenue. I mean, they have the GM OnStar, which is a great service. I've used it a little bit over the years. It's a cool service, but I mean, at the end of the day, like, we all got, Siri and Google in our pockets and like integrated with the cars that we have. So I don't know that that's really the future. GM is targeting revenue growth of operations such as OnStar, as well as new businesses such as the majority-owned self-driving subsidiary Cruise and commercial EV unit BrightDrop, from $2 billion to $80 billion in 2030. That is a incredible increase. Most of that new incremental revenue is forecast to be during the back half of this decade. Okay, so EVs, right? GM's projects EV revenue to grow from about $10 billion in 2023 to approximately $90 billion annually by 2030, as the company launches new models, including at least 30 new electric vehicles by 2025. That's very possible. I don't think that's impossible, but I think there's still a huge education. Job that needs to be done to get people to feel comfortable with an electric vehicle version of the car that they already know and love and like to hear the engine of, and all these things. So there's tons of benefits. I own an EV. I own a Chevy Bolt, but I don't know how long I'm going to have that for. So we'll see. Because of the battery issues that they ran into with LG, they're trying to take care of it, but I don't know. GM's annual capital spending, including investments in joint ventures to build battery plants. Ding, ding. That's what they need to do. They can't be relying on other companies for batteries if they want to actually have a real shot at dominating the EV market going forward. That's why Tesla's been so successful at it. Let's see. It's expected to be around $9 billion to $10 billion in the medium term as the company transitions to a majority EV product portfolio. GM said it expects to fully fund these investments through internally generated funds. Speed. As part of GM's move to achieve greater recurring revenue, the automaker plans to offer remote upgrades for its vehicles. They are expected to range from hands-free driving technologies to increased performance for things such as 0 to 60 software upgrade. So basically, they were like, "Hey, what's Tesla do to make a whole all the money that they're making?" Oh, that's right. We just sell those things. Now, hopefully, my hope is that that GM is selling these things like a 0 to 60 software upgrade, um, or like the self-driving module for the car. That's going to require them to really make a big shift, because we talked about this in a previous EntrepreNEWS episode of GM wanting to go direct with getting their chips instead of buying it through a third party, as well as the software that they need to make and maintain. There's a high level of competition there for those software developers that they're going to have to really get in and be really serious about. And these slow dashboard experiences are not going to be a thing that's going to get them where they want to go. EV chargers. To increase the availability of electric vehicle chargers, a major hurdle to EV ownership, GM plans to invest about $750 million in the devices by 2025. That includes home, workplace, and public charging throughout the U.S. And let's see, robotaxis. Cruise CEO said the majority-owned self-driving subsidiary expects to begin charging for robotaxis and self-driving vehicles in San Francisco by 2022, pending state approval. The company last week was granted the fifth of 6 permits needed to commercialize the self-driving ride-hailing fleet. Well, yeah, I mean, the way that the Super Cruise works is through LiDAR and predetermined, pre-mapped roads and things of that nature. So it's not going to be a huge rollout all at once. And with getting these permits is definitely definitely could still be a hurdle. Yeah, they're one permit shy, but I'll tell you, the first time they have a crash, or first time that they have something, somebody is going to slow the process down. They might still have the permits, but they might not be able to just like send them out willy-nilly with like driverless vehicles. They might have to actually have somebody there. Cruise is targeting a fleet of 1 million or more self-driving vehicles by 2030. That sounds pretty low, actually. According to a slide presented to investors, we expect to scale the business rapidly. He did not specifically discuss the 2030 target, but a Cruise spokesman said that's where the company believes it can be. Okay, well, that's where we're going to be investing based upon. AV spending. For the first time, GM detailed its previously announced plan to spend $35 billion on electric and autonomous vehicles through 2025. The plan includes $20 billion in capital and engineering related to electric vehicles, $10 billion in battery and motor production and development, including new plants, and $6 billion in Cruise. Ultra Cruise. GM said that in 2023, it will release a new hands-free system called Ultra Cruise that is capable of driving in 95% of scenarios. The system is expected to be far more capable than its current Super Cruise system, which is exclusively available on pre-mapped divided highways, which is what I was referring to earlier. At launch, GM said Ultra Cruise will be available on more than 2 million miles of road in the US and Canada. Super Cruise is currently available on more than 200,000 miles of road. Okay, so they have so Ultra Cruise better be absolutely incredible, but Ultra Cruise kind of makes me think that they're just doing more of the same, which is mapping all the roads and hoping for hoping that that's going to be enough to satisfy a self-driving car network. Awesome, hopefully. And it's 2023 is not that far away, so hopefully that doesn't slide. I think as we go forward here, there's going to be a lot to like as the pandemic continues to play out, and hopefully ding ding or knock on wood will be over soon. These predictions and these estimates will hopefully not slide for them, and we'll be able to see the fruits of the labor come to fruition here. Americans with criminal records could be a solution to the labor shortage. So there's this like almost 7-minute video. I watched all of it. It's the CEO of Kelly Services gives job seekers with criminal records a second chance at work. Basically, anybody, their theory is, I forget how much it said. There is like 70 million Americans with a criminal record. Is what they're saying is available out there with a non-violent criminal record, and they feel that they could help tap into filling the job labor shortage. I know here in New Jersey, they talk about on the radio like, hey, we're expunging all these minor marijuana lawsuit or not lawsuits, criminal records and things like that, and expunging them, which is awesome. I can definitely get behind that, but to say that, I don't know. I think that there's definitely an opportunity there. I think it's maybe a little on the optimistic side that you're going to have the right jobs with the right people that have, these non-violent criminal records that you could fill in the positions. I think to a certain extent you can, but that's not gonna. I don't think that's the end all be all answer. But it definitely could be a piece of the puzzle. So I would say if you're in a position where you're having trouble getting people, maybe it's time to open up the your search a little wider and take in, maybe take a look at some people's resumes that have some kind of nonviolent criminal record, and all of a sudden you're giving an opportunity to somebody who maybe wasn't going to have an opportunity or was having an extreme difficulty getting work or work of meaning that was equal to the training that they have or the education level that they have, something to that effect. So yeah, I think everybody as a whole needs to look at that, but I don't know that it's going to completely solve or be a huge impact there. But I do say it says it's one of the increasing number of companies, Kelly Services, trying to destigmatize so-called second chance workers with dual-pronged philanthropic and self-interested goals, help people get back on their feet and find workers in a tight job market. So I think it absolutely could be an opportunity, and it's an opportunity for you and for the person who needs that real opportunity to not just work a job lesser than what they're capable of handling or accomplishing. So maybe give that a look. I used my stimulus check to start a $3 million business. Just prior to the pandemic, I was laid off from my role as director of sales for a startup company in the insurance field. I had worked for about 3.5 years, and it was a really good job. And then I gave birth to my two twins. Again, I got a divorce. All of this happened within a 6-month period. That is heartbreaking. 6-month period, so it was a lot. It's a lot for people to take on any of those things, any one of those things. Let alone all at once in a 6-month period. People don't usually adjust to change super quickly or super well. It takes time. I'm always open to the idea of like, let's change. Let's find where the problem is and change. But there's a limit to how much everyone can handle all at once. And I think it's important to recognize that we're still human, and coming across, having twins, like going from having no kids to having twins to also having a divorce and having a new job, I had worked at this job for 3.5 years. It's a really great job. So, not a new job, but doing really good at your job, and then having all that. So she already had my 4 kids, and I then moved into my mom's house in LA. I was about to turn 28, and I really had to start again from scratch. I applied to more than 50 jobs, and although for 75% of them I had at least a first interview, nothing connected. So I took a step back and realized that perhaps I needed to take my skills and consult for other people. I was confident in my business, finance, and sales skills. I decided I need to take my skills to the marketplace rather than waiting for a job to hire me. I didn't want to be in a position where I was continuing to receive unemployment or public assistance, or I didn't have a lot of extra funds. So when the first stimulus check for $1,200 came in April 2020, I took it as a sign of it was now or never. I wanted to use the stimulus check to invest in what I needed for my business. So some of the purchases I made included spending $145 to design my website and pay for website hosting. I also bought a couple of extra domain names online, several ring lights for 170 bucks. I paid the taxes required to upgrade my phone. I took steps that put me in a position to create content online and start my business. My initial approach was to consult and provide coaching calls to companies. I was marketing myself on LinkedIn as someone who could go in and teach leadership and sales development to staff. I had led a team of around 70 sales staff in my previous role, and I knew I could provide value. So I'm going to link this article below for you to go through and read the entire story. But that is some awesome initiative, right? Taking the skills that you already know, taking an opportunity to say, well, it's kind of now or never, because what do I have to lose at this point? And instead of getting really depressed and down about it, going and taking that step and doing something about it. Absolutely love it. It doesn't say her name. It doesn't put a name there, but I want you to, it's Ellie Diop. Yeah, Ellie Diop. So I want you to think about what you can do right now to change the situation that you're in and figure out what is that next step that can make you better, the people around you better, unlock the super and in them and in yourself. And take yourself to that next level with the drive and the abilities that you already have, and figure out what kind of bet can you make on yourself, especially when you're at a point where it's like you feel like you've hit rock bottom. Especially when you're at a point where, hey, I did all I did all these interviews and nothing really seemed to work for me. So she did the things she needed to do, and ultimately found that what was going to work for her was getting taking that bet on herself, and at a time where it's like, hey, you don't need all that much money to do it, right? So you get some lights, you get your phone. Phone, you get the right lighting. Phones can be incredible devices for video, for streaming, and all those things, and you can make it happen. So I appreciate you watching today on the EntrepreNEWS. I look forward to seeing you all tonight between like 9 and 11 p.m. Eastern for the newest Shark Tank Season 13 premiere, Episode 1, of course. Denny, thank you so much for joining us. It's always a pleasure to have you in the chat and in the comments. Non-toxic only. We got to catch up sometime soon, man. I hope you have an amazing day and an amazing weekend. I will see you on Monday for the EntrepreNEWS. And of course, there's going to be more Shark Tank and The Profit and maybe some, Undercover Billionaire. Undercover Billionaire. I'll be doing another one of those with Grant Cardone in the near future here. So I look forward to seeing you all in the comments and in the chat. Have a great weekend. Take care.